Assalamualaikum and good afternoon. We are from class 6C and my name is Ammar.
My name is Faarihah.
My name is Nurhidayah.
And I am Natasha Idha.
So today we will explain about tax administration of a company and
GST.
Hi, my name is Aiza. Today I would like to present about resident status of the company. According to Section 8, Subsection 1, Section B, Income Tax Act 1967, companies are body of person carrying on a business. A company or a body of person not being a Hindu joint family carrying on a trade or business is resident in Malaysia for the basis year for a year of assessment. If at any time during the basis year, the management and control of its business or of any one of its businesses are exercised in Malaysia. We can determine resident status of the company if the company exercise their business in Malaysia. Next is why it is important to determine resident status of the company. This is the advantage of being a resident and disadvantage of being non-resident. First, if being a resident, you will able to incentive available under the Act and PIA 1986. And if the non-resident will not liable on incentive available under Act and PIA 1986. Next is if the company is resident, they will not applicable for withholding tax section 107A, section 109, 109B and 109F of the Act. If non-resident, subject to withholding tax ranging from 10% to 50% on national deemed derived from gross income. Next is double taxation relief. If the company is resident, they will applicable to double taxation relief, and the non-resident will not applicable for the double taxation relief. Last but not least is resident and non-resident enjoy the equal income tax rate, which is flat rate of 24%. This is what IRB does in practice to identify the company be a resident in Malaysia. First, they will identify by certificate of resident. The certificate of resident is issued to confirm the resident status of taxpayer. For the manual submission, these are the documents that will required for company and body of person. First is article and memorandum. Next is if the article do give a place of management and control, whether the article are being investment. Third is the company's letterhead. Fourth is minutes of director meetings, and last is minutes of general meeting. This is for online submission. First, need to fill e-resident or e-biz. For e-resident, at LHDN website, and e-biz at SSM website. For the tax return from the company for submission of Income Tax Act, the company need to return Form C. Form C is for companies, cooperative society, liability, partnership, and trust body. So you can see here, and the available of e-filing system for the taxpayer is on 1st April. This is the example of Form C.
Assalamualaikum. My name is Nurhidayah Binti Abdul Muhaimin. I will present about self-assessment system. First, what is self-assessment system? This is the manner by which a taxpayer would out his own income tax. Sales assessment system, also known as a total process change from the previous former assessment system. Objective in self-assessment system is to inculcate a practice of voluntary compliance by the taxpayer and at the same time reduce the workload of the IRB to enable them to concentrate on areas which have a high tax risk and a potentially significant loss in revenue. The step in self-assessment is taxpayer files annual tax return with IRB. Then IRB accept taxpayer's assessment of his or her tax liability as shown in files annual tax return. And the last is taxpayer pay amounts he or she self-assess and pay this to IRB within 21 days of lodging return with IRB. Okay, self-assessment system for companies is have six, which first furnish an estimate of income tax payable for year assessment in a prescribed form, which is CP204, not later than 30 days before beginning of basis period. After that, IRB will issue a notice of installment payment, which is CP205, and 12 monthly payment slip, which is CP207. After that, companies must submit the income tax estimate, which is CP204, and revised estimate CP204A via filing. Then the return form need to be submitted within 7 months from the closing date of the company's year and accounts. After that, the return submit is deemed to be a notice of assessment. The last one is company must settle the difference between actual tax liability and total installment payment on or before the last day of the sixth month from the date following the close of the accounting period. There are two types of penalties might be imposed if the company does not comply with self-assessment system. First, the due date for monthly tax installment is paid on the 50th of each month. Under Section 107C, subsection 9, if the installment is not paid by the 50th of each month, the amount paid will be increased by a sum of 10%. Second, penalties on underestimate of income tax payable in according Sections 107C, subsection 10, 10% penalty imposed on the excess of 30% difference between original estimate and actual tax payable. If no submission of tax estimates, the fine will impose 200 ringgit to 20,000 ringgit or imprisonment for terms not more than 6 months. Imprisonment for terms is not more than 6 months or both.
Assalamualaikum, and my name is Muhammad Ammar, and I'm going to present about sales and service tax, which is SST and GST.
Okay, what is service tax? Service tax is a tax charge and levied on the taxable service provided by any taxable person in Malaysia in the course of furtherance of business. It's provided by any taxable person in Malaysia, which is the priorities by any taxable in Malaysia only. Okay, the taxable person is any person who belongs in Malaysia and prescribed to be a taxable person. Taxable person is any person who belongs in Malaysia and is specified or defined to be a taxable person. And taxable service is any services which prescribe to be a taxable service. Okay, for example of taxable service, which is there is a service of food, service of gaming and club, which is for example restaurant, catering, cafe, clubbing, nightclub, golf club and private club. Okay, and what is sales tax? Sales tax is a single stage of tax levied on the imported and locally manufactured goods, either at the time of importation or at the time the goods are sold or otherwise disposed of by the manufacturer. Okay, it's a single stage tax levied on the imported and locally manufactured goods, which only for manufacturing only. Okay, next, goods and service tax, which is GST. What is GST? GST is a value-added tax levied on the most goods and services sold for the domestic consumption. The GST is charged by customer but is passed to the government by companies selling goods and services. Okay, the GST is included in the final price and paid by the consumers. At point of sales, it passed on the government by the seller. Common tax use by the majority of the countries use GST. For example, United Kingdom, Brazil, Spain, and our neighbor country, which is Singapore. They are also using GST. Levied on the most transaction in the production process, but is refunded to all parties in the production chain other than the final consumer, with the exception of the block input tax. Okay, usually GST is an indirect, such as a sales tax and a value-added tax, and tax is a single rate across a nation.
This is a chronology of changes from SST to GST in Malaysia. Okay, first of all, in 1972, Tun Mahathir introduced SST, Sales and Service Tax 1.0, until 2015. Malaysia used SST 1.0 until 2014. And then 2015, Prime Minister Najib Abdul he introduced a new method of tax, which is GST, Goods and Service Tax, used until 2018, and then there's a misunderstanding. In 2018, Tun Mahathir demolishing the GST and show a new method, Sales and Service Tax 2.0. Until now. This is the chronology of changes in SST and GST, which is more detailed and more specific. Okay, now starts from the bottom. Sales tax was implemented in 1972, and then the service tax was implemented a few years later in 1975. First of all, the sales tax and then service tax. And then in 1st April 2015, and implementation of GST, which on Prime Minister Najib. Okay, and then 1st June 2018, the declaration of GST tax holiday. And then 1st August 2018, passing of Sales Tax Bill 2018 by Dewan Rakyat, and 15th August 2018, passing the Service Tax Bill 2018 by the Dewan Rakyat. Okay, on 28th 28 August 2018, SST Act Gazette, and 331 August 2018, abolishment of GST, and then starts a new SST 2.0, which is on 1st September 2018, the implementation of SST. Okay, now I'm going to show you the differences between the GST and ACC. Okay, on SST, SST is one stage output tax and it governed under two separate laws, namely in sales tax and service tax. Okay, mainly for sales tax is for manufacturing and importers, which is manufacturing and imports, and the service tax is mainly for the service provided, for example such as accounting, IT and F&B. Okay, second of all, and for the GST is a consumption tax, where tax are imposed throughout the entire value chain of a product under the value added concept. GST claimable for the product cost. GST it's a value change from the throughout the value chain of the product under the value added concept.
Okay, my name is Nurhidayah with Hasbullah, and today I want to explain about the computation of GST and SST according to what government give. So, like GST is a consumption tax where every stage will be imposed 6% tax, while SST is a one-stage output tax where the SST will be imposed on sales tax 10% and service tax 6% on consumer. Okay, now we go to the calculation between SST and GST. Why I write 10% for sales tax and 6% for service tax. So for manufacturing stage, the gross sale price for both is the same, but it will be different according to their rate, which is for SST will be imposed 10% on sales tax, while GST will be imposed 6%. So there will a bit different here, and the government will collect with a different amount, which is government for manufacturer will collect SST 5 ringgit and 50 cent, while government will collect GST 3 ringgit and 30 cent. Okay, for wholesaler, the second stage will be for wholesaler there will be no tax that will be imposed, and while GST will be imposed 6% sales, which is 3 ringgit and 90 cent, and for wholesaler, government will collect nothing, while wholesaler the government will collect GST 60%. How we get 60%? It is between GST 6% sales minus with GST climb back. So we got the government collect GST 60%, 60 cent. Okay, for retailer, for SST will be imposed 6% for service tax, which I have explained before. SST will be imposed on sales tax at manufacturer and service tax on retailer. So 6% for service tax, which is 5 ringgit and 43 cent, and retailer will be imposed 6% tax for sales tax, which is 5 ringgit and 10 cent. So the total sale now for retailer is 95 ringgit and 40 cent, and for GST, total sale price for retailer is 90 ringgit and 10 cent. So the government will collect SST 5 ringgit and 40 cent, which is from SST 6% service tax, and government will collect GST RM1.20, which is the difference with the GST claim back and GST sales for retailer.
And then the last stage for GST and SST, which is consumer, total paid now that they have to pay for buy something is now is RM95.93, and for GST, if the government is using GST, the consumer have to pay RM90.10. So the total tax collected by the government is now from the manufacturer, also retailer and wholesaler is RM10.93, while the total tax collected by government, let's say if the government using GST, is RM5.10. Okay. So there are three impacts to Malaysia when there is a transition between GST to SST 2.0 that we have been used right now, which is first is less paperwork for business, and then number two is SST mandate cascading rise in price, and number three is government make lesser money. So for the conclusion of all, so SST is good to government because they can collect many tax from the every stage, while the GST is good for consumer because they have to pay